Hello, grade 12s. Tsebo here from Tsebo's Tutoring Academy, and today we will be looking at grade 12 accounting, November paper 1, November 2022. So we'll just do each question step by step, and I'll just walk you guys through the whole question paper. Let's just get right into it. So, question 1, we have company financial statements, the statement of comprehensive income and statement of financial position. 60 marks for 45 minutes. And they start by saying the information relates to Leisano Limited for the financial year ended on 28 February 2022. So, let's go on to the required. 1.1, they say refer to information B the first and calculate the cost of the stock that was damaged. 1.2, we must refer to information B the second and calculate the profit or loss on sale of the delivery vehicle and the total depreciation. Then 1.3, we must just look at the statement of comprehensive income and the equities and liabilities section of the statement of financial position. And also they say note that some amounts are provided in the answer book. So okay, let us go to information B the first so that we can start answering 1.1. So let's see what it has in store for us. So it says stock records. The business sells sports shirts. The weighted average method is used to value the shirts. The following information was extracted from the records. Okay, so we have stock balance on the 1st of March 2021. So by the way, since we were told that our financial year end is on the 28th of February 2022, that means our financial year began on the 1st of March 2021. So having a stock balance on the 1st of March of 1,900 units, these are just units from our previous financial year that we did not sell, right? So we ended the year with them, so that means we started this new financial year with 1,900 units. And purchases during the year, that just means we bought 7,100 t-shirts. And total available for sale, we have now 9,000 units that we at our disposal that we can actually sell to make a profit as a business. And then now looking at units sold, we have 7,750 units sold. So basically from that 9,000 we sold 7,750, and then we were left now with stock balance on the 28th of February 2022 to be 1,185 units. Okay, so they also say note that damaged shirts were not included in the closing stock figure. The damaged shirts must be written off as a loss. So basically, within now my stock balance on the 28th of February 2022, my damaged stock is not included, right? So 1.1 wants us to calculate the cost of stock damaged. So let's see, using information B the first. So there are plenty methods that you can use, but I'm going to try and use the easiest one as a means of explaining to you guys as simple as possible, right? But also just note that the methods that I'm using, you are not limited to just using them. If you have different methods that you know of, and just feel free to use them as long as they are going to get you to the same answer. Then go for it, because there's more than one way to kill a cat. So let's go. I'll just be using units, by the way, to calculate the cost of stock damage. So what I want now is to actually figure out the actual number of units of t-shirts that were actually damaged, right? Then from there I will just calculate the cost of those t-shirts. So as we know, we started the year with 1,900 units, and then we also bought 7,100 units, right? and that meant we had 9,000 units that we could actually sell to make a profit. But then out of that 9,000, we sold only 7,750, right? So from the 9,000 units of t-shirts, I'm going to subtract 7,750, and the remainder should now be my closing balance at the end of the year. So let's see, I have 9,000 units, and then I'm subtracting 7,750, and then I'm left with 1,250 units. So basically my stock balance was supposed to be 1,250, but we can see now that it is actually 1,185, which is less than the 1,250 that we should have at our disposal. So this tells us that now, some stock was damaged, as we've been told. So how will we know the number of units of stock that was damaged? It will actually be now the difference between the 1,250 units that I'm left with after selling, and also, so it's the difference between my 1,250 units and my closing stock balance. So let's see the difference between the two. The difference will just be now my units that were damaged. So 65. So basically I have 65 units damaged, right? 65 units damaged. This is not the rent value, it's just the number of units that are damaged. So now we want to determine the cost of these 65 units that were damaged. And also remember that we are told that the weighted average method is used to value the t-shirts. And with the weighted average method, what we need is now simply just our total rent value and divided by the number of units. Then that's how we are going to obtain our weighted average. So I can see here that I am eligible to use now the information from total available for sale to calculate my weighted average. So I will just say now it's actually 6,579,000 rands divided by 9,000 units, right? And then let's just see how much that will be. So 6,579,000 rands divided by 9,000 units. That's basically our weighted average, and it's actually now 731 rands. So now this tells us that each and every t-shirt is worth basically 731 rands when we value it using the weighted average method. So I will just say now, okay, since I'm looking for the cost of stock damaged, I know that I have 65 units that are damaged and they each cost 731 rands. Let's see how much that will be. So 731 times 65, that's 47,515. 47,515. So that's basically that. I'm just going to jump to 1.2.1. They say calculate the profit or loss on the sale of the delivery vehicle. Okay. And let's see, which information must we refer to? Now we must refer to information B the second. Okay, let's go. So here's information B the second. We have fixed assets, we have land and buildings, vehicles, accumulated depreciation on vehicles, equipment, accumulated depreciation on equipment. So vehicles are depreciated at 20% per annum on a diminishing balance method. Equipment is depreciated at 15% per annum on cost. The bookkeeper calculated the total depreciation as 328,200 before taking the following into account. So basically this 328,200 is a incorrect amount for depreciation, right? Because it doesn't include everything that happened on that particular year, on our current financial year. So for vehicles, there's an old delivered vehicle with a carrying value of 170,000 rands on 1 March 2021. So 1 March 2021, that's at the beginning of our financial year. It was sold for 140,000 rands on the 1st of December 2021. And then for equipment, we have an alarm system costing 48,000 rands that was installed on the 1st of August 2021. So now 1.2.1 wants us to actually calculate the profit or loss on the sale of the delivery. So we can see already that we are supposed to now refer to this information that looks at vehicles. Now let me just highlight it for you guys. Okay, let's see what they are trying to say to us. So an old delivery vehicle with a carrying value of 170,000 rands on 1 March 2021 was sold for 140,000 rands on 1 December 2021. So we are going to need the following. First of all, we're just going to have to write down the months of our financial year. So we know that our financial year starts on the 1st of March 2021. So after March, we have April, May, June, July, August, September, October, November, December, January, February, and it ends on the 28th of February 2022. Okay, let's see now. On the 1st of March 2021, the carrying value was actually now 170,000 rands, right? We know of that. And then when was this vehicle sold? It was sold on the 1st of December 2021. What does that information tell us, right? So it tells us the following basically. It tells us that we used this car now from the 1st of March 2021 until now the 31st of November 2021. And then we sold it on the very first day of December, right? So we only used it for these months that I have just highlighted for you guys there. So what does this tell us? It actually tells us now that we are only going to depreciate now this delivery vehicle only for these months that we used it for, right? So let's see. We are using the diminishing balance method at 20%, right? So I know that my carrying value at the beginning of the year was 170,000 rands, and I am depreciating at 20% per annum. And then now I only used it for how many months? 1, 2, 3, 4, 5, 6, 7, 8, 9. So it's only 9 months from the 1st of March 2021 until the 31st of or the last day of November 2021, right? So that's just 9 months. So we'll also multiply that by 9 over 12. So we have 170,000 rands multiplied now by 20% and multiplied by 9 over 12. How much does that give us? So we have now a depreciation of 25,500 rands. So this is the depreciation for this current financial year, right? For our delivery vehicle. Okay, so let's see. Now to calculate the profit or loss, we just need now the carrying value of the vehicle on the day at which it was sold, right? So since we are depreciating using the diminishing balance method, to find the carrying value, I will just take now the carrying value that I had at the beginning of the year, which was 170,000 rand. And I'm actually going to subtract now my depreciation during the year, right? For this current financial year, for the 9 months that we use this delivery vehicle, which is actually 25,500 rands. So let's see how much that gives us so I have 170,000 and I'm removing 25,500. So that's actually 144,000 rands. 144,500, right? Let me just double check. 144,500, yes. So let's see. We are also told now that it was sold for 140,000. By the way, this is the carrying value on the day at which my delivery vehicle was sold, right? And this is the amount at which it was sold for. It was sold for 140,000, right? So to get my profit or my loss, I'm going to take the price at which my in this case delivery vehicle was sold, which is now 140,000 rands, and I'm going to subtract the carrying value of that delivery vehicle. And already we can see that I'm having a negative balance, right? Of how much? Of 4,500 rand. So I have negative 4,500. What does this negative means? It means that I've made a loss now of 4,500 rands, right? So I hope that is making sense for you guys. So I'm just going to go to 1.2.2. Now we must calculate the total depreciation for the year. So okay, we are given that the depreciation before adjustments was 328,200. So now we want the depreciation on the vehicle sold. But for this one, we already calculated it here now when we got the 25,500 rands, because it's actually the depreciation for this current financial year, right? And we are looking for the total depreciation for the year. So we're just gonna have the following now. We're just gonna have now 25,500 rands here. Okay, that was pretty straightforward. But then let's look at now the depreciation now for on the alarm system. So we have to actually go to the information. So alarm system falls under our equipment in this case, and they're saying an alarm system costing 48,000 rands was installed on 1 August 2021. So let's see the following. As soon as we are told the year, we know that our depreciation and counting our months will come into place, right? So I will just remove everything here and just start afresh. So I'm just going to write down my financial year again, so I know from the 1st of March 2021, then we have April, May, June, July, August, September, October, November, December, January, February, the 28th of February 2022. Okay, let us see what we have now. So I'm told that my alarm system was installed on the 1st of August 2021, right? What does that say? It says now that we actually used my alarm system from the 1st of August, because as soon as we install it starts being depreciated, right? It's like, for example, a vehicle. As soon as now you get out of the dealership with a vehicle and start driving it on the road, it starts depreciating immediately. So same thing with this alarm system. As soon as we installed it and it was working, it started depreciating. So we used it from the 1st of August 2021 until now, the end of our financial year, which is the 28th of February 2022. So how many months do we have? We have 1, 2, 3, 4, 5, 6, 7. So we only used it for 7 months for this current financial year, right? And as we were told that equipment is depreciated at 15% on cost. So I'll just have the following. I will just take my cost now of the alarm system, which is 48,000 rands, and I'm going to multiply it by the 15%, but I'm also going to multiply it by the 7 months here that we used it for, right? So 7 over 12. Let's see how much that gives us. Was our calculator. So I have now 48,000 rands multiplied by 15% and multiplied by 7 over 12. That's 4,200 rands. So that means for this financial year, that alarm system depreciated only for 4,200 rands. So to get the total depreciation, we are just going to add anything from the 328,200 plus the 25,500 plus the 4,200, and that is actually 357,900. 357,900. So basically that's how the cookie crumbles in this case. That's the gist of how we're going to do that. But they also give us a very important note. Let me highlight it for you guys. They gave us a very important note. So they are saying now the amounts calculated above must be transferred to question 1.3.1, the statement of comprehensive income, right? So before you can even start now attempting to complete your statement of comprehensive income, the first thing you should do is to just transfer these amounts, because already you are just getting marks for just plugging in those amounts as they are in the correct places, right? So we are going to do that first.
Are you still here? Follow me on Instagram at Sebo's Tutoring Academy, then go and practice accounting. You are writing paper 1 on the 16th in case you forgot.
We are just going to just transfer those amounts that we have calculated here. So let's start with the first one. So we had the cost of stock damaged, right? So that can go to our operating expenses. So we can, say it the way it is: cost of stock damaged, right? Or you can even say trading stock deficit. However, the wording does not really matter as long as it talks to the loss of stock. All right. And then now the second one, we have the loss on the sale of a delivery vehicle. So that's also going to be part of our operating expenses, right? So loss on sale of vehicle, it was actually 4,500 rands. Okay. Last one, we had depreciation of 357,900. Also, it goes to now our operating expenses. So we have depreciation now as 357,900. So once we are done with here, there are two ways, right? You can go back now. We can go here to our balances and just plug these balances into their respective category, or we can just go according to our adjustments and just try and adjust everything. Then if there's anything that is left, we will now try and go back here. So I just think that I will just now, for the sake of this recording, I will just start by going through the adjustments, right? So let's deal with the first adjustment. Let's see, what are they saying? So it's the number 3. So we have 33,700 rands received from a debtor whose account was previously written off as irrecoverable. Okay, I'm just going to read it first. Was posted in error to the debtor's control account. This must be corrected. The provision for bad debts must then be adjusted to 3% of the debtors control balance. Okay, let me read it again and analyze it. So 33,700 rands received from a debtor. So received, that means it's a payment to us, right? From a debtor whose account was previously written off as irrecoverable. So this was a bad debt at first, but then that bad debt now paid us. So what were we supposed to record it as? We were supposed to, record it as now bad debts recovered. But instead of doing that, there was an error, and it was posted to the debtors control account, right? So what does this tell us now? It just basically tells us that now, okay, from my debtors control account, let me just try and make space and use T accounts to make an explanation for you guys. So okay, we had now our debtors control account, right? This is how it's looking. So 33,700 was received. So as soon as it was received, now what the mistake they did was actually they just credited it in our debtors control account, which is incorrect because this was a bad debt, right? So this is debtors control. What was actually supposed to be done now was to credit it right here, right? By our, what's this, bad debts recovered. Bad debts recovered. This is this is an income account. This is what we are going to do. This is what happened, right? But they were supposed to do this. But this is what they did as soon as they received the money. If this is what we are going to do, if we are going to fix this, we are just going to do the following. We are just going to debit it, because if we are debiting it now, that means we are adding, right? We are adding the 33,700 back here. So this is just how we are going to so yeah, it's just basically us removing it here, and then we are just going to take it to the right place, which is crediting it this side, right? So it's just basically that in a nutshell if we have to look at T accounts. So in my balances I had now a figure for debtors control, right, for 2,746,300, and as we have figured that we must actually add this amount, no? We must add it this side. So 2,746,300, we must actually add now 33,700, and it will give us whatever it gives us. Then number two, to fix that mistake, we are going to take it now to the other income category, and we are going to record it. Let me just enlarge the screen. We are going to record it now as bad debts recovered, right? So bad debts recovered, actually for 33,700. But then let's see, let me just put it back here. Okay, so we have bad debts recovered. Let's see how much we will have now if we are adding now. So we have 2,746,300 plus 33,700. That's actually 2,780,000, right? When we are actually fixing it. Okay. So now they say in the second part, there's a second part because we have corrected, right? So we did the first part. There's a second sentence. The provision for bad debts must then be adjusted to 3% of the debtors control account. So okay, with provision for bad debts now, since we have fixed, basically, because this is our debtors control, we have fixed it, right, to be 2,780,000. So now we must multiply by 3% to now have our provision for bad debts. So let's see. If we multiply by 30% to have our provision for bad debts, um, how much are we gonna have? So we have now an amount of 83,400 rands, right? So this is our provision for bad debts. So with provision for bad debts, the now the process is to actually compare it with the opening balance, right? With the opening balance. So as we can see, we had an opening balance of 85,840 for provision for bad debts. And then now at the end of the year, we have now an amount of 83,400. What does that mean? That means now we have an income, right? We have an income, and the income would be the difference between my balance at the beginning and my balance at the end. But it will not always be like this. In this instance, it's an income because my balance at the beginning is greater than my balance at the end, right? So we are just going to record this under my other income. So I have provision for bad debts. So it's actually 85,840, and we are going to remove that 83,400, right? Yeah. So if the tables were turned now, and I had an amount of 83,400 at the beginning of the year, and then at the end of the year I had an amount of 85,840, that would now be an expense. All right, that would now be an expense because the nature of provision for bad debts is just us making a provision at the beginning of the year that according to our budgets and according to now the trends that we have seen from our our debtors within the previous financial year, we are most likely to need 85,840 to repay ourselves because we are expecting a total of 85,840 to not be repaid to us by our bad debts. So basically putting an amount, a contingency amount to pay ourselves in case now our debtors don't pay us anymore. And if that's the case, and then what actually happened during by the end of the year was that now we only needed 83,400 out of that 85,840. So the difference is now an income because it goes back to our bank account, right? So number 4, they say the business signed a contract with Always Safe Securities for guarding the premises. An annual premium of 32,400 rands for the period ended 31 July 2022 was paid in full on 1 August 2021. So let's see. Let me just make some space here to show you guys calculations. So we have the following. I just want you to read this thing again, starting from here. So we have an annual premium. So annual, this tells us this we have a 12-month premium basically, or a 1-year premium of 32,400 rands for the period ended 31 July 2022, and it was paid in full on the 1st of August 2021. So what I can see now is that 31 July 2022 is actually out of our current financial year and goes into the next financial year. But it was paid with on the 1st of August 2021, which is within our current financial year. So this is a prepaid expense by just looking at it, right? So let's see the following. I'm just going to have my financial year. So I know it starts from March, the 1st of March 2021. So we have April, May, June, July, August, September, October, November, December, January, February until the 28th of February 2022. All right. Okay. Then from here we are gonna have the following. It the annual premium ended on the 31st of July 2022, right? So we have February, then we're going to have March, April, May, June, July. So this is where it ends, 31 July 2022. But you can see I made it a different color to show that it's you know, for it doesn't fall within our current financial year. So this premium, since they said it's an annual premium, that means it runs for 12 months. And if it ends on the 31st of July 2022, that means it began on the 1st of August 2021. So we have now a 12-month premium going on here. And as we were told, it was paid on the on the 1st of August 2021 in full, right? So we are just going to check the following. By now, you have to realize that what they are testing now is actually the matching principle, which tells us that now we should record our incomes and expenses, within their respective and correct financial year, right? So this is just a part of our GAP principles, the matching principle. So we can only account now for August until February, but then going from March 2022 until July 2022, we will only record that next year. So this is a prepaid expense. Let's see, but we want to figure out how much is it, right? We were told that it's a annual premium of 32,400. So since it's an annual premium, and yeah, we figured that it's a year, that means we have 12 months, right? So we are going to divide this amount by 12 to see how much we paid per month. So 32,400 divided by 12. It's actually 2,700 rands. Okay, so we have 2,700 rands, right? So by now, what we are going to do, we just want to see that from March, April, May, June, July, how much did we actually have? So how many months is that? It's actually 1, 2, 3, 4, 5 months. So we know per month we are paying 2,700 rands, but we want to see for 5 months. So we are going to multiply it by 5. Let's see how much it gives us multiplied by 5. So that's actually 13,500 rands. Okay. Now, we are going to do the following. We are going to actually subtract this 13,500 rands from our security expense. Ne? So let's just see back here at our balances. So we have security expenses. Let me highlight it. We have security expenses with an amount of 72,500 rands. So it's an expense. So I'll put it under my operating expenses. So security, it's going to be now, okay, 72,500 rands. And I'm going to remove 13,500 because that's for the next financial year, right? Yeah, I just hope that I didn't make it too complicated for you guys. So I just try to break it down as much as I can so that it can be easily understandable by you guys. So that's basically how you do it. Let's move on to number 5.
Are you still here? Follow me on Instagram at Sebo's Tutoring Academy, then go and practice accounting. You are writing paper 1 on the 16th in case you forgot.
Okay, so number 5. It says all details in respect of the February 2022 salary of an employee were incorrectly debited to the sundry expenses account. The following information relates to his salary, so it is split between now the net salary and the deductions, right? So now they tell us that the business contributes 2 rand for every 1 rand deducted for the pension fund. And we must note that EFT payments have already been processed for all relevant amounts payable. So okay, let us try and see what's going on. So we know for a fact that we are dealing with now salaries and wages. So let's see the account for salaries and wages. So here we are. So it's salaries and wages including contributions. So these are the contributions that we make as a business, right? So I will just have salaries and wages and contributions. Yeah, so the balance we have here is 1,381,500. Okay, let us see. Going back to the adjustment. So they are saying now all details in respect of the February 2022 salary of an employee. So this is the salary for February, right? Of an employee were incorrectly debited to the sundry expenses account. So if it was incorrectly debited to the sundry expenses account, that means that salary is not included within this balance of 1,381,200. So what we need to do now, according to this adjustment, is to actually figure out the whole, salary, including contributions that we made as a business, and just add it here, right? Okay. So yeah, we are just going to try and fix that, and then since now it is made up of the account now is made up of salaries and wages as well as contributions, we will just split this thing into two parts. So we'll have the first part being for the employee, and the second part will just be for the contributions, right? So with in terms of the employee, we need now the gross salary. So the gross salary will just be the net salary plus our deductions, right? So that will be the gross salary. So it's just going to be now 11,525 plus the payee, which is 3,235, and then plus the pension fund, which is 990. Okay. Then when it comes to the contributions, these are the contributions that were the company, the business makes, right? So they say now the business contributes 2 rand for every 1 rand for the pension fund. So if now for every 1 rand I'm paying 990, and the business is supposed to pay 2 rand now, that means basically they are going to pay 990 times 2, right? So the business is going to contribute 990 times 2. So let's see how much they're actually going to let's see how much they're going to contribute. So it's going to be 990 multiplied by 2, and it's actually 1,980. Okay, and then let's just add up the part for our employee. So we are just looking for the gross salary now. That's 11,525 plus 3,235 plus 990, and then that's 15,750. So now the amount that we should add would be now the sum of these two amounts, right? Because this is the salary basically, and then this is the contributions. So 15,750 plus 1,980, that would give us now 17,730. So this is now the salaries and wages as well as contributions. So as I said, we have to add it because it was incorrectly debited to the sundry expenses account, right? And then that's basically how we deal with that. Let's look at our sundry expenses, if it's included here. So for sundry expenses, we have now a question mark. So if we have a question mark, 9 times out of 10, that means now the sundry expenses, and it is actually given here. So that would mean now the sundry expenses is a balancing figure, right? The sundry expenses is a balancing figure. So if it's a balancing figure, we will just continue and just have to leave it the way it
number
is.
6.
So yeah,
We have now the following. A tenant
has been leasing office space on the premises since March 2020. She has paid the rent until 30 April 2022. Note that the monthly amount was reduced by 1,350 with effect from 1 January 2022. So, okay, let's see. Already we can see now that the 30th of April 2022 is outside of our financial year, right? So that means they are testing the matching principle again. So let's see. Let's just write down our financial year. We know it starts from the 1st of March 2021. Then we have March, April, May, June, July, August, September, October, November, December, January, February. Okay, let's just do it like this. Then the year ends on the 28th of February 2022. So now, basically, for the whole financial year, this tenant has paid us, right? But then she also paid now for March 2022 and April 2022 until the 30th of April 2022. Okay, let us see what else we can do. So far, if you can see now, the tenant has paid for 14 months, right? The tenant has paid for 14 months. And let me also go to the balance here and see. So it is rent income, right? What we are dealing with, rent income. So it has a figure of 183,600. So I will just have rent income here and write down the figure of 183,600. So let me go back to where I'm making my calculations. So as we said, she has paid us for 14 months. Okay, let's go back to the adjustment. So now we can see the following. We do not know how much how much monthly rent she was paying, but what we know is that from the 1st of January 2022, the monthly rent decreased by 1,350, right? So it was not only for January, but just for January, February, March, April, just basically starting from January. Minus 1,350 minus 1,350 minus 1,350. And then now, to just kind of find how much we were paying, since we don't know, we will just give it an X amount, right? So we are just going to take a mathematical approach with this one. So each and every month we were paying an X amount of rent. That's what we know. We were receiving rather an X amount of rent. And then from January now, we were receiving an X amount of rent minus 1,350. So that's what it's going to be from now on, from January. X minus 1,350, right? Okay, so let's see. As I said, we are going to take a mathematical approach. So to just kind of calculate this X amount, we are going to add all these values of X. And since we have 14 months, it's going to be 14X. And then we know we have a minus 1,350, right? But it's for how many months? It's from January until April. So that's 1, 2, 3, 4. 1, 2, 3, 4. So we must do the following. 1,350 multiplied by 4 months. How much is that? So it's actually 5,400. So we are going to have 14x minus 5,400. And the total will be what was actually recorded now in the balances. And as we have seen, that our balance is 183,600. So we are just going to do the following. We're going to take the 5 minus 5,400 to this side, but it's going to change sign. So it's going to be 14x, which is equals to 183,600 plus 5,400. So I can just say 5,400 plus 183,600. Then it's actually 189,000. 189,000. So to get the value for x, I must divide by 14 here so that I have x only. And I also have to divide the 189,000 by 14. So let's see. 189,000 divided by 14 is actually 13,500. So we have 13,500, right? Okay. Now let's see. Since we are testing the matching principle, that means the rent that we have received for March and April, we must actually remove it because it only relates to the next financial year, right? But how much will it be? We know that it's x minus 1,350, but then we know that our x now, which is the monthly rent before deduction, it was 13,500. But then for March and April, it was actually now minus 1,350. So let's see how much it is. So 13,500 minus 1,350, and it's actually 12,150. 12,150. So that means for March we received 12,150, and for April we received 12,150. That's 2 months. So to get the full amount for 2 months, we'll just have the 12,150 and multiply it by 2. So it's actually 24,300. But what are we going to do with this 24,300? We are going to subtract it, right? Because it relates to the next financial year. So minus 24,300. So number 7, they say income tax for the year is calculated at 30% of the net profit. So the net profit after tax is 356,300 after adjustments. So we can also see that here, by our answer sheet, it is actually given, right? So let us see what we can do. So with this one, we are just going to use a more accounting approach, which is the what you want over what you have multiplied by what you have, right? So let us see, what do we mean. We have three things now. We have net profit before tax, we have now the income tax, and then we have net profit after tax. So the net profit before tax now represents 100%. Let me see. It represents 100% now of my profit. And then the income tax now is actually 30%, right, of my profit. And then the net profit after tax, what would it be? After reducing the 30% from the 100%, we'll be left with now 70%. All right, so that's a first step that we need to figure out. So once we have figured that out, we can now go to our method of what you want over what you have multiplied by what you have. So what is it that I want? I can either look for my income tax or my net profit before tax. So let's just try and calculate our income tax, right? So that's 30%. So what I want is that I'm looking for the 30%. What do I have? What value do I actually have, right? What amount do I actually have? I have the amount of 356,300. And what does it represent? It represents now the net profit after tax, which is 70%. So I have now the 70% times what I have. What I have now is actually the rent value of what I have, which is now 356,300. Right? So I'm just going to take that to my calculator and see what it gives me. So I'll just say 356,300 multiplied by 30 over 70. And it is actually 152,700 rands, right? So it's just going to be now 152,700. And we know that our income tax is actually deducted, right? So it reduces our net profit before tax. So we are going to put it in brackets so you can, even make a calculation here and say 30 over 70 multiplied by 356 300. So from here now, we don't really need to use this method of what you want over what you have. So to just find our net profit before tax, we can simply do the following. We can simply have now, we can simply try and work backwards, right? So we know that my net profit before tax minus my income tax is equals to my net profit after tax. So to work backwards, I will just say now my net profit after tax plus my income tax is equals to my net profit before tax. So basically, in terms of numbers, my 356,300 plus 152,700 is equals to my net profit before tax. So I'll just have the following: 356 300 plus 152 700, and that's actually 509,000. So that would be how we attack that kind of question. So let's see the next one. So the next adjustment is talking about a loan. And then with the loan, the only thing we need is interest expense, right? But we can see that it is already given. So that means there's nothing else we can do with the loan. And then in terms of shares and dividends, they have nothing to do with our statement of comprehensive income, and now as well as net asset value per share, because that would be made up now by my ordinary shareholders' equity over my number of shares issued. So I think now everything we are basically done in terms of our adjustments, right? So we just have to complete our now statement of comprehensive income. So let's go back to our balances. So let's just double check that for our other income, is there anything that we are leaving off? So we know that we have commission income that was given, and we have bad debts recovered, we have provisions for bad debts, and we have rent income. So there is no other income that is left. So if that's the case, we are just going to have the following. Let's just balance everything out, right? So we know here there's a 400. So I will just say now, for my provisions for bad debts, it was actually 85,840 minus 83,400. How much is that? That's 2,440. So 2,440. Then for my rent income, I had 183,600. Then minus my 24,300. So that's actually 159,300. 159,300. Then to just total off now my other income, I'm going to start by adding my commission income, which is 4,560. So even this amount that was given, that was already given, in the answer sheet, when you calculate the total of now the other income, you must include it as well, guys, because usually students, they just leave it out. So plus 33,700 plus 2,440 plus 159,300. So it's actually 200,000. So that's my other income, 200,000. Okay, that's a clean amount. And then to get my gross operating income, I know I have to add my gross profit and my other income, right? So just these two. So I have 200,000, then I'm just going to add 3,690,000. That's actually 3,890,000. So okay, now going to the biggest part, which is expenses. Let's see. For my other expenses, I have now security, right? So let's just total our security. So we have 72,500 minus 13,500. That's actually 59,000. Okay, 59,000. And for my salaries and wages and contributions, we actually have now 1,381,500 plus 17,730. So that's actually now 1,399,230. But we cannot just total everything out because we still need our sundry expenses, right? So maybe what we need to see is to check if we don't have any other account that falls under now the category of operating expenses. So we have okay, cost of sales, directors fees, it's already there, audit fees, it's already there, salaries and wages is there, security expenses is there, and sundry expense. So that's all right. So as also we figured out, since sundry expenses has a balancing figure, no, it has a question marks, we know that it's going to be a balancing figure, right? So let's see. Now we can do the following. I have now my net profit before tax to be 509,000, and then I have my interest expense to 250. Okay, so what I'm going to do now, I'm just going to work backwards even further, right? So I will just say now my 509,000, but then I'm going to add it with my 142,250 so that it can give me now my profit before interest expense. So okay, I'm just going to have 509,000, which is now my net profit before tax, and then I'm going to add now 142,250, and then it's actually going to give me an amount of 651,250, right? 651,250. So as you can see, a lot of our amounts we have to get them by working backwards, right?